let's get started. My name is Allison, a Customer Success Associate here at YCharts, and hosting our webinar today is João Trivera, an Account Executive on our sales team, and Carl Reed, a Sales Engineer on our Customer Success team. Today, we're covering new features on model portfolios, including blended benchmarks, portfolio sleeves, and advisory fees. We'll walk you through how to use them and what they can do for your portfolio. If you have any questions during the webinar, you can submit them on the left-hand side of your screen. Please keep in mind that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, as always, a recording of this webinar will be made available on YCharts under the Support Topics section and sent to all attendees. Now I'm going to pass it over to Carl to get us started.
All right, thank you, Allison, for that introduction. This is Carl Reed here from the support team, and as Allison mentioned, along with me today is going to be my colleague João Trivera, account executive here at YCharts. As Allison briefly mentioned, today's agenda is going to include 3 awesome new features that have recently been released here at YCharts related to our model portfolio tool. Those are going to include blended benchmarks, portfolio sleeves, and advisory fees. So today, we're going to be hopping into use cases that our clients have used recently and have been adopting since their releases, and then go into how to actually build all 3 of these things in the system. So without further ado, we're going to hop right into things and head over to the YCharts website. All right, so before we hop into things, for those of you who are unfamiliar with blended benchmarks, a lot of investment advisors and analysts in general use blended benchmarks by combining multiple market indexes into one security. Usually, what they're used for is going to be a comparison for balance strategies, asset allocation strategies, and much, much more. The first topic of business here is how to create blended benchmarks on YCharts. That's going to be done through the Model Portfolios tool on the website. Once we head over to the Model Portfolio tool here, we're actually going to give the ability for you as a client to easily create blended benchmarks made up of S&P 500 and the Barclays Agg. And the way we're going to do that is through the Create option in the top right-hand corner and starting from New from Template. This is going to be a new feature that we just released that's going to make it easy for you to create screens, model portfolios, and even charts. So after I click on that here, we're going to see 3 options on the left-hand side as it relates to ETF benchmark models, index portfolio models, and specialty portfolios. What we're going to key in on here is going to be the index model portfolios, which are going to include allocations from 20/80 all the way to 80/20 equity. So after we select on one of those and click Start, that's going to bring in both of the securities into the model portfolio editor. And as you can see, as mentioned just a moment ago, that's going to bring in the Barclays US Agg and the S&P 500 total return. And here you can see that 80/20 distribution. And if you would like to keep that and create that model portfolio, all you have to do is click on Save in the top right-hand corner. All right, and João, you've been pretty quiet over there. I would love to ask you, so while people are on trial, how have you been seeing people use this?
Yeah, Carl, great question. So, recently working with people on trial, I've seen a lot of advisors coming to us and asking how they can use blended benchmarks in the YCharts system to not only communicate with their clients, but educate them about the markets. So this is especially important in today's market with all this volatility that we have. And using YCharts, it just becomes very easy and simple to kind of communicate with your clients why you're running the strategies that you are. So this is a great example of kind of what you've built out here with this benchmark. The one thing that I see people on trial doing is actually building out multiple benchmarks like this and then creating a visual for their clients. And they're typically doing that through our fundamental charts. So if you want to jump into fundamental charts, we can kind of take a look at some different allocation breakdowns, over different time frames. So let's start by kind of throwing in that benchmark that you just created. And let's also plot in a couple others that you have there in the system as well. Maybe a 40-60 if you have one, and a 60-40. Perfect. All right. Now, you can see this is kind of giving us the levels of these benchmarks, but what we're really trying to monitor and communicate to our clients is the performance of these. So let's go ahead and normalize that information there on the left-hand side. Now, the best part about this is that you can really see, how these benchmarks have performed against one another over different time frames. So right now, we're looking at like a 1-year chart. Can obviously see the drop down, over the past couple of months over there. But let's actually extend this out a little bit. Let's go back and let's look into like maybe, early 2000s if possible.
Yeah, and a great way to do that actually, stepping in here, would be via this date range dropdown. So we can select full year there and then hop over, select, let's say 2000 in this case, and then bring it all the way back to 2020.
Perfect. Now we can really see, how these different benchmarks would have performed over that 20-year period. And what I see a lot of people doing is actually incorporating, prior U.S. recessions into these charts. So you can do that by using that chart options drop down at the top, being able to plot out U.S. recessionary times. You can see those there in the gray area. So whether it is, putting this simple chart in a monthly update to your clients, maybe it is a weekly newsletter, or you have someone coming in and you're trying to educate them on, why you're running this strategy, this is a great way to kind of paint that picture.
Yeah, this is awesome, Zhao. And then let's say somebody wanted to share this. How would they go about doing that?
Yeah, really easy. So upper right-hand corner gives you that ability to switch this chart into presentation mode. Now, once you do that, this is going to format the chart so that you can not only print it out, but save the image file and then upload that into an email or a newsletter. The best part about this is that our clients know this is co-branded with your firm's logo and information. You can actually enter in a title or a note. So along with just, creating the actual image, being able to type in a note down below and talk to your clients on what they're seeing is, really invaluable.
Yeah, this is awesome stuff. And then how would they go about saving this as an image?
Yeah, so really easy, Carl. In the upper left-hand corner, you're going to see new fundamental chart unsaved. By going up here, you can actually just save this chart. This chart will automatically update for you. So if you come and pull this up at the end of the week, maybe end of the month, it's constantly going to update for you. Obviously, you can always change the date ranges on there as well. Your other option is in the upper right-hand corner. You have that ability to actually download the image file. You can save that to your computer, or you can print it out. So a couple of different options that you have available. You can see that if you download the image file, it's going to kick it out to a PDF for you, and you can upload that easily into any blog, newsletter, Twitter post. Any way you are communicating with your clients, this is a great way to do it.
Yeah, this is great stuff. If you'll allow me to walk through another example of how people are using this, something we haven't touched on yet is this percent off high option. So not only can we see the returns and how those have had an impact with those different allocations over time, we also have the ability to really have that conversation with somebody about the portfolio risk that is coming with each allocation. So if we hop over here into the normal view now, we can then hover over and basically talk through how much risk you're taking on due to the different allocations in the benchmarks here. So we can see that the 60-40 drew down probably about 25% more than that 20-80 during the last financial crisis. And that's something that's going to be super sticky with somebody and really be able to communicate that different risk profile.
Yeah, definitely. I think that goes a long way. The other nice thing about this is that obviously we're just talking about different benchmarks that we've created here in the system. But for our clients that are using these charts on a regular basis, they already know that you can incorporate, any security into this chart, any portfolio that you've built out. So it doesn't have to be just benchmark versus benchmark. Obviously, that's a great way to look at it. But being able to incorporate, a portfolio you're running, a fund that you guys currently own is extremely valuable. Now, the one thing that I do get asked quite a bit, Carl, from people on trial, and I think you have a lot of experience with this, is when advisors are trying to build out blended benchmarks, but instead of just looking at performance and drawdown, they really want to break this down on maybe a sector level or even a style exposure. How can we do that in the system?
Yeah, definitely. Great question. I see it all the time here, Zhao. And going back to actually that definition we gave of a blended benchmark, how they're used against balanced strategies, asset allocation strategies, I'm really going to key in on that second one, the asset allocation strategy. So currently, these benchmarks are just comprised of the S&P 500 and the Barclays Agg. If we wanted to go back and edit one of these benchmarks to include a different asset class, that's definitely possible. So we're going to head back into the model portfolios and then pull up one of those benchmarks. In this case, I'm just going to search for that 60/40. Go into the editor. Once we're here, we have the ability to edit the holdings by clicking on Edit Items and then add in additional asset classes. So for the sake of time here, I'm just going to do one, and that's going to be the MSCI World ex-US. So the reason I chose this is because this is the most common asset allocation breakdown I see when working with clients. We're going to have a US equity portion, a world equity portion, and then a fixed income portion here. So once we add that security, all we need to do is alter that US equity and then allocate the remaining percent to the MSCI World. And just like that, we're going to have an updated benchmark that includes not only US equity and fixed income, we're also going to get that world exposure.
Now, Carl, I see you working with our clients. Sometimes you're building out blended benchmarks that are strictly just the indices that we have available in the system. And then other times I also see you building out blended benchmarks that consist of strictly ETFs. Can you talk about the breakdown and why you would use one over the other?
Yeah, that's a great question, Zhao. So for using indices, or the reason to use indices, are going to be to show that true performance of the underlying index. So in this case, if we combine these, that performance should be spot on to what that index is showing. The reason we would build out something using ETFs would actually be to show something like a sector exposure breakdown, style exposure breakdown, any type of allocation data point. That's when that ETF benchmark really comes into play. So in the system, I actually already have one built out to show this. So I'm just going to navigate over to that quote page. And as you can see here, from that 60/40 ETF benchmark, this is going to be comprised of basically the same holdings, only the ETF versions of them.
Nice. Now, when you build it out in, with just using the ETFs, how are you seeing our clients incorporate this against a portfolio?
Yeah, great question. So we have a couple of really great tools to quickly analyze a benchmark like this versus a portfolio using the quick flow option on the right-hand side. So after clicking on that, I'll click on the comparison option. And as you can see here, this is going to automatically pull in my first portfolio that I'm on. And then if I wanted to search for a client portfolio, just using John Doe in this example, we're going to have all these different options in the comparison tables to show equity style, geographic exposure, sector exposure, etc. So really quick, to give you an example here, I'm just going to pull in that sector exposure table. And how I see clients using this is a quick analysis of what is overweight or underweight versus the model and their portfolio. So looking through this right now, everything looks pretty similar. However, for John Doe, if we wanted to limit that financial sector exposure, because that's a little bit overweight, we can quickly see that in this table. And this is really powerful just to see a quick view of these metrics.
Now, this is great for someone like yourself, Carl, that really likes to work with data and numbers. What about if we need to simplify this and make it, I guess, presentable, get something in front of a client to educate them on what we're looking at here?
Yeah, great question here, Joe. So not only do we have that quick flow option, if I head back to the client portfolio, we're also going to have the ability to create reports on these model portfolios. So that option is going to be in the top right-hand corner. And after clicking on report, that's going to give a list of all of the reports that I can generate versus another portfolio or benchmark that I've created. So for this example, I'm going to choose that side-by-side allocation report since we really want to key in on that. And then search for that 60-40 ETF benchmark. After selecting that and clicking on next, we'll fill out all of the qualitative information here and then generate that report. And just like when creating that image, it's going to drop that download into the bottom left-hand corner. And once we open that up, we can then see all of the allocation breakdowns from the portfolio versus that ETF benchmark.
Nice. Now, at the top of the webinar, Carl, you mentioned that we're also going to be talking about portfolio sleeves. First of all, what are portfolio sleeves, and how have you seen our clients use them in YCharts?
Yeah, it's a great question, Zhao. And I'm just going to head back here to the slide deck for a great visual. So you can think of a portfolio sleeve as kind of its own portfolio that you can manage separately, but eventually a couple of these are going to come together and create their own custom portfolio. So let me click through here to give you an idea of what I'm talking about. So as you can see here on this visual, this US equity portion is going to be a sleeve in itself. The international equity will also be a sleeve, and the fixed income will be our third sleeve in this example. Under each of those, you can see the individual holdings that make up the sleeve. And now how I see some of our users using this functionality is then building out each of their sleeves as a model portfolio to then combine into an overall portfolio for their clients. So this is really great because adding different amounts to each sleeve determines the risk profile of a given portfolio. You know, if a client wants to simply tweak the risk profile and increase the equity portion, all they really need to do is increase that allocation in the US equity and international sleeve and have those changes be automatically made in the YCharts system. Same thing goes for fixed income.
So if I'm getting this correctly, Carl, what you're telling me is that if I make a change to that US equity sleeve and swap out Amazon for Netflix, that's going to be reflected through all of the portfolios that contain that sleeve?
Absolutely. As soon as that update is made, that's going to recalculate all of the model portfolios that include the US equity sleeve. Once you make that change, there's really no legwork on your end to then go and update all of those other models. As you can see here, going into that other main bullet point, hopefully this is going to save you a lot of time, and it's going to be very easy to personalize client portfolios. So working again with this example, if somebody's a little bit more bullish on the international equity portion, you can then tweak that sleeve to increase that while then decreasing the US equity if you wanted to keep the overall equity exposure the same.
Well, let's check out an example of what you just explained.
Yeah, I'd love to. So hopping back into the YCharts system here, again, this is going to be obtained through that model portfolios option. And going into my account here, you're actually going to see 3 sleeves already built out that I'm going to click into. So then on the left-hand side, you can see that I have my fixed income sleeve, international equity sleeve, and US equity sleeve. So I'm going to click into that US equity sleeve just to show you what that's comprised of. A couple of ETFs. And from here, now that we have all 3 of these sleeves built out already, what we want to do is actually head back to that portfolio editor and combine these into an overall portfolio. So we'll do that just like we're creating any other model portfolio on the system. Name this, say 60/40 is that allocation that we're going for. And then simply search for each of the sleeves in here. So then after all 3 of those sleeves are added, we then just need to adjust the target weighting just as we would with a mutual fund, ETF, or stock by typing in those figures. And once we have that equal to 100%, click on Update and then Save. All right, so now that that's done calculating, we can click into the model itself and see how those 3 sleeves made up this one portfolio. So just like any other, we're going to see key stats here, the top 10 holdings, which are going to be those 3 sleeves, and how that asset allocation breaks down, as well as all those hypothetical returns here.
Now, Carl, is there any way that we'd be able to look at the individual sleeves performance as well as this portfolio as a whole in YCharts?
Yeah, absolutely. So what we would want to do to show that is actually head over to our fundamental charting tool. And what we can do here is actually pull in all 3 of these sleeves just by searching there. And then pull in that total portfolio that these 3 sleeves make up. So once we have that, all 4 of those charted out, we can very easily see what all 3 sleeves and the model has done year to date. What we can do here is simply normalize that and get that percentage change and really talk about the different contribution levels here for each sleeve. So as we can see here, that fixed income is really staying up year to date, whereas the US equity and the international equity are really pulling down the overall portfolio.
Yeah, that's great, Carl. I think that really helps so that you can really see how each allocation is performing, over different time frames, as well as helping people understanding the importance of diversification. You can obviously see that 60/40 portfolio really right there in the middle between your fixed income and your equity sleeves. So I like that. The other thing that you mentioned was being able to show advisory fees in these model portfolios. Let's take a look at that. I'm interested to see how our clients are adopting this and get your thoughts.
Yeah, we can definitely walk through that now. So really quickly, I'll head back to our model portfolio tool and go in and edit the portfolio that we just made of those 3 sleeves. So we'll do that by clicking on the pencil, and then you'll see here this new section for advisory fees. So you'll have 3 options here: quarterly, annually, or never for advisory fees, and simply choose whichever is more appropriate for you, and then throw in a number here for that annualized fee. And what's important to remember here is even with a quarterly fee, you'll want to apply the annualized rate of that.
So while that's calculating, Carl, other than just applying the fee to a portfolio, how do you see our clients utilizing this advisory fees?
Yeah, that's a great question, Zhao. So something I see most often is actually advisors comparing performance with different fee schedules. So I'll do this by heading over to the fundamental charting tool. And before we started here, I actually was able to build out a couple of portfolios that were exactly the same, only they had different fees. So I'll pull both of those into the fundamental charting tool here, this 50/50 portfolio with a 1% fee and a 50/50 portfolio with 2% fee. So these portfolios are just made up of the S&P 500 and the Barclays Ag. And right off the bat, you can see the difference in the levels from inception. And something that I see advisors really take advantage when doing something like this is our growth of 10K option under data format. So right off the bat, you're able to see the difference in dollar value over the last year. But then if we extend that over to 10 years, they're really able to show that, hey, if my fee level is only 1% and you held the same portfolio with another advisor who had that fee at 2%, you would be saving automatically $2,000 over 10 years just by making that switch, regardless of underlying holdings. So something really powerful that our advisors have been showing off to their clients that I've seen.
Yeah, I like that. That says a lot in just a simple chart. So, Carl, how are fees deducted in YCharts?
Yeah, that's a great question, Zhao. So I'm going to head over to the model that we created just a couple of minutes ago, that's 60/40, since we have a fee applied. And as you can see here, this is going to be a 1% fee annualized, and we're going to deduct that quarterly. So whenever you created this, doesn't have an impact on when the fees are deducted. That's simply going to be at every quarter end, we're taking 0.25 away from this particular portfolio.
Gotcha. Okay. Now, how does that work if we're using sleeves to build out these portfolios?
Yeah, great question there, Zhao. Something that we've seen is people applying fees at the sleeve level and the portfolio level. That's not what you're going to want to do, actually. You're only going to want to apply a fee to the overall portfolio level or the underlying sleeves. So heading back into that editor, you can see here that none of my sleeves have an annualized fee. So in my case, I'm only going to be applying the fee to the portfolio that I'm making of these sleeves.
That's a great overview of this new functionality, Carl. No, I appreciate it. I'm sure our clients do as well. Why don't you kind of wrap us up, just kind of go over everything that we talked about here today and send us home.
Yeah, definitely. So I'm just going to click back into the model we made of those sleeves now to talk through things. So first thing we covered here, blended benchmarks. We created one earlier. We can assign it to this particular portfolio. Boom, just like that, we have that applied to this portfolio that's comprised of sleeves. We created those earlier, and that's going to be the makeup of this particular portfolio. And then lastly, we're applying a quarterly fee here at 1%. That's going to cover how these advisory fees are applied to the portfolio.
That's great, Carl. Really appreciate your time here today. Appreciate everyone that joined us on the webinar today as well. For any questions, please reach out to support@ycharts.com or your account manager. We are continuing to build out the YCharts system, the model portfolios, a lot of new features and functionality coming out. So keep your eyes out, reach out to your support representative if you have any questions. Now I'm going to pass it over to Allison to wrap it up.
Thank you, Zhao, and thank you, Carl, for giving us a walkthrough on the newly released features added to model portfolios. I want to reiterate that a recording of this webinar will be made available in the support topics section of our site in case you need to review anything we went over or to share with your colleagues. For any questions that you might have submitted during the presentation, your YCharts contact will be reaching out soon with the information you're looking for. Thank you all for attending today's webinar. We always appreciate any feedback you may have. If you have any questions regarding anything we covered today, please feel free to reach out.